Hi everyone, I hope you're enjoying our summer months that are finally here. And now with the new interest rate hikes and inflation at its highest, today I want to go over how it's affecting our real estate industry here in the Greater Toronto market. In fact, Toronto Real Estate Board has just come out with its latest stats comparing May of this year to May of last year. And today we're going to go over three of the most important takeaways. Number one is the number of transactions. Just as we expected, just like last month, the number of transactions are down, and they're down by, in fact, almost 39% compared to last year in May. And the number two takeaway is the number of listings. Number of listings has almost remained the same compared to last year, but the main difference is the number of days on market homes are staying. Now we are gone up from 15 days to 18 days in the market, and that's the main difference we're noticing. Price and number of listings has not been changed too much, but it's mainly the difference that things are staying in the market a little bit longer. So this does present an opportunity to buyers to negotiate a little bit more. And then number three takeaway is average purchase price. Purchase price has actually increased by 9% compared to May of last year, which shows you the resilience in the pricing of our homes in the GTA at the moment. So overall, what we're noticing, just to summarize it all, is that yes, there are a lot more listings in the market and they're staying longer in the market, but they're not necessarily selling at a much cheaper price. You do have a little bit of more negotiating power as a buyer, just because as things are staying in the market longer, some sellers do agree for a better deal. But overall, on average, pricing is still pretty stable compared to last year. Now, why are we all experiencing this? We all know that the number one reason is the higher interest rates. And we don't know if Bank of Canada is going to increase rates any further, but now banks are tightening their lending. And this is causing the market to kind of just hold off and see what's happening and kind of normalize to these new interest rates. And we are noticing a few transactions that aren't being able to close because people aren't qualified at the higher interest rates. Now, I have a lot of clients asking, okay, what do you think is going to happen with the market, right? Or what is happening on the ground level? We all know that we are experiencing a little bit of a slowdown. Do we think it's going to get any better? Yes, but the question is when. In our industry, we believe this slowdown is short-lived. It should hopefully last from 6 to 12 months. And after that, things should slowly start going back to normal as people get used to the normal interest rates. So now, if there's a slowdown, is that necessarily a bad thing? Not really. As we all know, real estate is cyclical, and every 10 to 15 years, there is supposed to be some kind of downturn, as we've seen in history. Now, luckily, Canada, in the last 20 years, we haven't experienced such a downturn, and that's why we believe Canada is very resilient towards a slowdown. If we do have a slowdown, which we are having right now, it shouldn't hopefully last longer than 6 months to a year because we have a lot more immigration than other countries and a lot stricter lending policies than other countries. Now, if we look at the chart of the last few recessions that have occurred in history, you will notice one thing in particular. In every recession and after every recession, there is an upswing in the market. So if we look at the first recession back in the 70s during the era of oil embargo, you will notice that after a 48% decline, 3 months after this decline, there was a 14% upswing in the market. 6 months after this decline, there was a 31% upswing. Just as you'll notice the same thing with the dot-com bubble. In the 99 and 2000 era, there was a 49% decline in the market, and 3 months post the decline, there was a 19% upswing and an 11% upswing 6 months after. And then we had the financial crisis of 2007 and 2008, and that's actually when I started my career in real estate. So I've already experienced one downturn, and it tells us that even though the market went down 57% at that time, afterwards the market went up by an astonishing 39% just 3 months after, and 6 months after, 53%. Why are we mentioning this? It's to show you that the market goes up after a downturn. This is just part of the peaks and the valleys. And the main thing is, what is your action plan during the slowdown? Do you sit on the sidelines and wait? Because if you wait, you might miss that upswing that happens after the downturn. So we suggest don't wait. Instead, be very smart and look for those good deal investment opportunities. Either a good deal by price or a good deal by a location that you usually wouldn't have found if the slowdown didn't occur. So I would really highly suggest any investors out there, any buyers, any sellers, if you need a full analysis of your portfolio and advice on where you should invest, how you should invest, and when you should invest, do schedule a call with us, because we will show you not only how to diversify your portfolio, but how to strategically see which investments would be the right fit for you now, and basically help you seek out the good deals during the slowdown. Another graph I want to show you is this one that shows Toronto is still one of the fastest growing cities in North America. Another graph also shows you just my point that I mentioned with the strong immigration. It shows that we have record high immigration coming in the next 3 years, 400,000 people per year, and they all need homes to stay in, and we still have a shortage of a housing supply here in the GTA. So as people get used to these new interest rates, there will still be demand for homes and condominiums. The last graph I want to show you is this one that shows that Toronto is still affordable from a global perspective. All the top cities in the world are priced higher than Toronto. So if you're looking at it from a global perspective, we are still a very good deal. In fact, a lot of the top cities in the world are selling close to $2,000 to $2,500 per square foot, whereas Toronto is still averaging near the $1,500 to $1,700 per square foot mark. So overall, the main message of this video is that yes, a slowdown is occurring. Will things get worse? Possibly. But will things get better? Definitely. There's always an upswing after a downturn. So for those buyers, sellers, and investors out there, the main message is take this as a time of opportunity to get properties and deals that usually aren't available, and take this as an opportunity to diversify your portfolio. Here at KAPS Realty Group, for the last 15 years, we have been selling both US and Canadian properties. So we are experienced in both markets and have always guided our clients to diversify their portfolio from day one. So if there's an upswing in one market and a downswing in another, your portfolio can handle it. And not only is diversification important for your portfolio, but asset allocation is also very important. And if you guys want me to do a video on asset allocation, we can definitely do that. Comment on the link below and we can do that next time. But in terms of asset allocation, I always emphasize never have all your eggs in one basket. So on your real estate end, if you're diversified in terms of different countries, different asset classes, that's great. But now your asset allocation in general, you should have real estate, you should have some alternative investments, and then you should always have your rainy day savings investments, which are usually, low risk investments such as bonds, your savings accounts, and all that. Now, we can definitely spend another video on going over what percentage should go into each basket, but the main thing is never have your eggs in one basket. The key really is to diversify. If you properly diversify your portfolio, that is what's gonna save you against any slowdown or downturn in any economy. So if you have any questions, please do reach out. We would be happy to help you out. And if you're liking these real estate update videos, please do like and subscribe to our channel so we can continue bringing them to you. Until then, enjoy your beautiful summer and we will talk soon.